What if I told you this isn't a normal gold rally anymore? What if the system that has been controlling gold and silver prices for decades is starting to break? Because right now, something unusual is happening in the market. Gold is moving wildly, not in a steady trend, but in sharp, unpredictable swings. We're seeing price fluctuations between $4,000 and $5,400, a massive range of over $1,400. That's not normal behavior for a stable bull market. And here's where it gets even more interesting. At the same time that gold prices are swinging aggressively, participation in the futures market is collapsing. According to the data, gold open interest has dropped to around 350,000 contracts, levels we haven't seen since the 2008 financial crisis. Let that sink in. Back in previous bull markets, prices went up, participation increased, open interest surged. That's how a healthy rally works. But this time, prices are rising, while participation is falling. That's a complete disconnect, and this is what experts are calling decoupling. The gold price is no longer being driven the same way by the futures market. In simple terms, the system that used to control price is losing its influence. Now, why does this matter? Because when liquidity disappears from a market, when fewer participants are involved, something dangerous happens. Price moves become sharper, volatility increases, stability disappears. And that's exactly what we're seeing right now. Gold is no longer moving in a smooth, predictable trend. It's jumping, dropping, rebounding, almost like the market is struggling to find control. And silver? Silver is even more extreme. Because silver already has a smaller market, lower liquidity, and higher sensitivity to trading flows. So when participation drops, silver becomes highly unstable. Small buying or selling pressure can trigger sudden spikes, sharp crashes, violent swings. This is why some analysts are now asking a very serious question. What if silver doesn't just go up? What if it becomes difficult to even price? Because when liquidity dries up, markets don't become stronger, they become fragile. Now add to this the global backdrop. Central banks are buying gold aggressively. Countries like China and India are accumulating. Geopolitical tensions are rising. Energy routes like the Strait of Hormuz are under pressure. All of this is happening at the same time, which leads to one conclusion. This is not a normal cycle. This is a transition. A shift from a system driven by financial markets to one driven by real demand, fear, and strategic accumulation. And if that's true, then what we're seeing right now is not just volatility. It's the early stage of something much bigger. Because when a system starts to lose control, it doesn't stabilize quietly. It moves violently. And that raises the most important question of all. Are we entering a historic breakout or the beginning of a financial system under stress? So now we come to the most important part of this entire story. What does all of this actually mean for the price of gold and silver? Because up to this point, we've seen a breakdown in the futures market, falling liquidity, rising volatility, and a massive shift from west to east. But here's the key question. Is this weakness? Or is this the setup for the next move higher? Because when you look closely, a very specific pattern starts to appear. Let's go back to what just happened. Gold drops sharply, one of the biggest corrections in recent years. At the same time, Western investors sold aggressively. ETF outflows surged. Sentiment turned negative. On the surface, that looks bearish, but under the surface, something very different was happening. Because despite all that selling, gold did not collapse. It did not break down completely. It held within a strong range. Why? Because every time the price dropped, buyers stepped in. And not just any buyers. China, Asia, long-term accumulators. This is what's known in markets as absorption, when strong hands absorb selling from weak hands. And historically, this is one of the strongest signals that a market is forming a bottom. Now think about this. The West sold billions. Prices dropped sharply. Fear increased, but the market held. That's not weakness. That's support. Now let's bring silver back into the picture, because silver always behaves differently at this stage. When gold stabilizes after a correction, silver usually lags behind, remains volatile, looks weak. But that's temporary, because once confidence returns, silver tends to move faster than gold. It catches up aggressively and often overshoots. This is because it's a smaller market. It reacts more to capital flows. It attracts momentum traders. So what we're potentially seeing right now is gold forming a base, silver building pressure. And when those two align, the move can be explosive. Now combine this with the bigger picture. The futures market is weakening. Real demand is increasing. Eastern accumulation is rising. Liquidity is tightening globally. This creates a very unique setup because in a normal market, prices move based on trends and data. But in a stress system, prices move based on capital shifts, fear, and sudden demand spikes. And that's exactly where we are right now. This is not a clean, predictable bull market. This is a transition phase, a phase where old systems are losing control, new forces are taking over, and price behavior is changing, which means the next move won't be slow, won't be obvious, and won't wait for confirmation. It will happen quickly, and most people will only recognize it after it's already started. So now the stage is set. The West has sold. The East has bought. Gold is holding. Silver is lagging. Which leads to the final and most important question. What could trigger the next major breakout? So now everything comes down to this. What actually triggers the next move? Because the setup is already in place. The futures market is weakening. Liquidity is dropping. The West has sold aggressively. China and Asia are accumulating. Gold is holding strong. Silver is lagging but building pressure. This is not the beginning of a move. This is the setup before the move. And in markets like this, the trigger can come fast. Let's break down the 3 biggest catalysts that could change everything. 1. Interest rates start falling. Right now, high interest rates are one of the main reasons Western investors stepped away from gold. But if that changes, if rate cuts begin, if expectations shift, then suddenly the opportunity cost of holding gold drops. Capital flows return, ETF outflows reverse. And when Western money comes back into gold, it doesn't move slowly, it moves aggressively. 2. Dollar weakness. The US dollar has been a major pressure point for gold, but if the dollar starts to weaken, gold becomes more attractive globally. Demand increases across all regions. Prices get a natural push upward, and combined with Eastern accumulation, that can create a powerful rally. 3. Global instability increases. This is the wild card. Geopolitical tensions, energy disruptions, financial stress in major economies. All of these increase uncertainty, and when uncertainty rises, investors look for safety. Gold demand spikes, silver follows, often faster, and in a system that's already unstable, that move can become explosive. Now here's where everything connects. We are no longer in a market where price moves slowly, trends build gradually, signals are clear. Instead, we are in a market where liquidity is thin, control is shifting, and reactions are fast, which means when the next move starts, it won't give you time to prepare. It won't look obvious at first, and it won't wait for confirmation. And this is where most people get it wrong. They wait, they look for certainty, but by the time certainty appears, the move is already gone. Now let's bring silver into the final picture. Because if gold starts moving higher again, silver doesn't just follow, it accelerates. Smaller market, lower liquidity, higher volatility. This means silver can outperform gold, it can move faster, and it can surprise the market. And that's why many major cycles end with silver making the most aggressive move. So here's the bottom line. This isn't just about gold going up. This is about a system under pressure, a shift from paper markets to real demand, from west to east, from stability to volatility. And if that shift continues, we are not just heading into another rally, we are heading into a revaluation. Before moving forward, make sure to subscribe to the channel and like the video if you want to stay ahead of major shifts in gold, silver, and global markets. Because right now, the biggest opportunities are forming. Exactly when most people are still unsure.